Have you ever thought about like how some companies just like they take off like a rocket, right? And
Right.
everybody thinks they're invincible and then boom, they just crash and burn.
Yeah, it happens a lot more than you think.
It's kind of wild.
Yeah, yeah. It really makes you think about like what really makes a business successful in the long run.
Well, that's exactly what we're going to dig into today, right here on BizCase Insights with I guess you could call it the cautionary tale of WeWork.
A cautionary tale, yeah.
From like the unicorn status to a penny stock and now ending up in bankruptcy.
It's crazy.
It is pretty wild. And thankfully, we've got a good source here to guide us through all the ups and downs.
We do. We have a super helpful timeline from this street. It's dated March 22nd, 2025, and it lays out all the key events, like all the twists and turns of WeWork's journey.
Perfect. So today, we're not just going to focus on the dates. We're going to try to like really understand what happened, right? Like what lessons can we learn from this whole WeWork saga?
Exactly. We want to like extract some insights about how businesses work, the fundamentals, and like what this means for investments as well.
Yeah, because I think a lot of people were probably caught off guard by this.
Totally.
So let's rewind all the way back to the beginning. Our timeline shows WeWork was founded in 2010 in New York City by Andy Neiman, Rebecca Newman, and Miguel McKelvey. I mean, it feels like just yesterday. But their first shared office space opened in Soho back in April 2011.
Wow. So it all started with just one location.
One location.
It's amazing to think about how much it grew from there.
It's wild. But, it seems like they really stepped on the gas early on, right?
They did. This first few years were all about like getting the money they needed to grow.
Raising capital.
Exactly. They raised $17 million in April 2012. That was their Series A funding round.
Wow.
And then they got another $40 million in February 2013. That was their Series B. And that really allowed them to open more locations, get more members, and really like set the stage for their big plans.
And then in November 2013, they hit that milestone that every startup dreams of, right?
The unicorn status.
They became a unicorn. They got a valuation of $1.6 billion, which is crazy, after they raised $157 million in their Series C funding round.
It's a lot of money.
So for anyone listening who might not be familiar with the term, unicorn in the business world means a privately held startup company that's valued at over $1 billion.
It's basically like saying, hey, this company has the potential to be huge, to be a real game changer.
And get this, by 2019, WeWork had raised a total of $22.2 billion across 23 funding rounds.
Oh, wow. So many people were buying into their vision.
It's mind-blowing.
Yeah.
And it really shows how much excitement there was around this whole idea of flexible, community-driven workspaces.
I mean, you can see why investors were so excited, right? It felt like WeWork was tapping into a fundamental shift in how businesses think about their office needs.
Yeah, absolutely. So let's fast forward a couple of years to like 2015, 2016. This is when their growth went into hyperdrive.
Yeah, this is when things really started to take off.
In December 2015, they had 65 locations with over 40,000 members. And they started that year with only 16,000 members.
5 times the number of members. That's huge growth.
Yeah. And then just 1 year later, by December 2016, they had ballooned to 110 locations with 80,000 members. They were expanding globally at an insane pace.
That's fascinating, right? Like they were growing so fast.
So fast.
But you have to wonder, like, was their business model actually keeping up with that growth?
Right. Were they sacrificing, building a strong foundation for just pure expansion?
That's the question, isn't it?
And then in August 2017, they got a huge, massive investment from SoftBank, $4.4 billion.
Oh, whoa, that's a lot of money.
A lot of money. And that pushed their valuation to $20 billion. And eventually, SoftBank invested over $17 billion in WeWork with backing from Saudi Arabia's sovereign wealth fund.
That's a serious commitment from SoftBank.
It is. It really shows you how much they believed in WeWork's potential to, like, disrupt the commercial real estate market.
Yeah, like to revolutionize it completely.
Exactly. So now we come to 2019, the year when WeWork reached its peak valuation, but also when things started to, well, unravel. In January, they rebranded as the We Company, suggesting they wanted to be more than just shared workspaces.
Did a bold move, for sure.
It was. And then SoftBank invested another $1 billion, pushing their valuation to an incredible $47 billion.
$47 billion. That's an insane amount of money.
It is. They had 425 locations in 100 cities across 27 countries with almost 600,000 members. I mean, they were everywhere.
At that point, WeWork was truly a global brand. They had a massive network, a recognizable name. But in August 2019, their IPO prospectus, the Form S-1, came out. And that's when the reality of their financial situation became clear, and it didn't look good.
Yeah, the numbers in that S1 were a bit of a shock, weren't they?
A bit of a shock. They reported some huge losses, $429.7 million in 2016, then $933.5 million in 2017, and a whopping $1.93 billion in 2018.
And they were still losing money.
It was like a wake-up call for investors.
Yeah, this wasn't just about a company investing for future profits. It looked like a serious problem with their business model.
Exactly. Like, their revenue was growing, but their costs were growing even faster, which means each new customer was actually costing them money. So the question is, how did they get such a high valuation when they were losing billions?
Yeah, that's a great question. It really makes you think about what investors were focusing on. Were they ignoring these losses because they were so caught up in the hype?
It's possible. Sometimes investors get really excited about potential, about disrupting an industry, even if the company isn't profitable yet.
It's easy to get caught up in the hype, for sure. And unfortunately, the losses didn't stop there.
No, they kept piling up.
WeWork lost $3.26 billion in 2019, $3.13 billion in 2020, $4.44 billion in 2021, and over $2 billion in 2022. It's just hard to fathom a business model that burns through that much cash for so long.
Yeah. And that's what really starts to raise questions about their long-term sustainability, you know? Like, at some point, those losses have to stop.
For sure. And I think that's when people started to get really worried. Then, in September 2019, Andy Newman stepped down as CEO. There was so much scrutiny around the IPO plans and the mounting losses. He was replaced by co-CEOs Artie Minson and Sebastian Gunningham.
It felt like a big shift, you know? Like, they needed a change at the top to try and turn things around.
Definitely. And then, in February 2020, another leadership change. Sandeep Mathrani became the new CEO.
So they were trying different things, trying to find the right leadership.
Yeah. But then, just when he was getting settled in, the COVID-19 pandemic hit in March 2020.
Oh, wow. Talk about bad timing.
The worst timing, right?
Yeah.
Because suddenly, everyone was working from home. And WeWork's whole business was based on people working together in shared office spaces.
It was a disaster for their business model.
It was. Their membership plummeted from 662,000 at the end of 2019 to 490,000 by March 2021.
I mean, it really exposed how vulnerable their model was to something like a pandemic.
Right. Like, what happens when people can't or don't want to come into the office anymore?
Exactly. It makes you think about how important it is for businesses to have, like, backup plans, to be able to adapt to unexpected events.
To be resilient, right?
Yeah, resilience is key.
So, despite the pandemic, WeWork tried to make a comeback. In October 2021, they went back to their original name, WeWork, and finally went public through a SPAC merger. They started trading on the NYSE under the ticker symbol WE.
Okay, so they were still trying to make it work.
Yeah, and their stock actually went up initially. It hit $11.78 per share, giving them a valuation of $9 billion. It seemed like they might be turning things around.
But then what happened?
Well, that optimism was short-lived. By April 2023, the NYSE issued a notice of noncompliance. Why? Because WeWork stock had been trading below $1 for 30 days straight, which meant they were at risk of being delisted.
Oof, not a good sign.
Not good at all. Their stock price had dropped to just 48 cents. Their valuation had shrunk to a measly $380 million.
From $47 billion to $380 million. That's a huge drop.
An unbelievable drop. And then, in May 2023, Sandeep Mathrani resigned as CEO, and David Tolley stepped in as the interim CEO. It seemed like they were constantly searching for the right leadership and the right strategy.
It sounds like they were struggling to find their footing.
They were. And then, on August 8th, 2023, things took a turn for the worse. Their financial filing for the first 6 months of the year revealed a loss of $696 million. And even more concerning, they said there was substantial doubt about their ability to continue operating.
Substantial doubt? That's a pretty serious statement.
It is. They basically admitted they might not be able to stay afloat.
So what were the reasons?
They cited ongoing losses, obviously, and then the need for cash to keep operating, and then the fact that people were leaving WeWork, and also their dwindling cash reserves. By the end of June, they only had $680 million in total liquidity, with only $205 million of that being actual cash.
So they were running out of money fast.
Yeah, and the market reacted immediately. The very next day, their stock price plummeted 38%, making it a penny stock.
Wow, so it was all coming to a head.
It was. And then, on November 6th, 2023, It finally happened.
They filed for bankruptcy.
They filed for Chapter 11 bankruptcy protection.
That means they're not necessarily going out of business, right?
Chapter 11 bankruptcy in the U.S. allows a company to keep operating while they figure out a plan to pay back their debts.
Okay, so it gives them a chance to restructure, to try and salvage something.
Exactly. So let's take a moment to recap this wild ride.
Yeah, let's process all of this.
We saw WeWork experience explosive growth, fueled by tons and tons of investor money. Then they reached a sky-high valuation that, looking back, seems completely detached from their actual financial performance.
And then the pandemic hit, exposing the fragility of their business model.
Right. And in the end, they became a penny stock and had to file for bankruptcy. It's a cautionary tale for sure.
It really is, and it leaves us with a lot of questions, like what were the biggest mistakes that led to this outcome?
Right. Was it growing too fast without a solid foundation?
Did they overestimate the market's demand for shared workspaces? Was their valuation based more on hype than reality?
Yeah, and how much did the pandemic really hurt them? It's probably a combination of all these factors.
Definitely. And that's what's so fascinating about this story. It's a reminder that building a successful business is complicated.
It's more than just growing quickly or getting a big valuation.
Exactly. You need to have a solid business model, you need to be able to make a profit, and you need to be prepared for the unexpected.
Yeah, you've got to be resilient.
Exactly. And I think that's the big takeaway from WeWork's story. It's a reminder to look beyond the hype, to look at the fundamentals of a business before you invest, and to always be prepared for the unexpected.
Well said. Well, that's our second deep dive here on BizCase Insights.
Thanks for listening.
We hope you found it insightful, and we'll be back soon with more deep dives into the world of business.
See you next time.
See you later.